Hello, potential home buyers, maybe first-time home buyers, especially you, because you haven't gone through this before. I'm going to talk to you about the costs that are going to be related to buying a new home, and some of them are up front, before you close, and a lot of them are going to be after you close, when you're just turned loose into the world as a new homeowner. And this is just a cross-sectional sampling. There are likely a lot more that I could add to this list, but these are the ones that first come to mind for me. So the first thing is that you need to understand that you should be planning for inspection fees. Now, some mortgages, like an FHA loan, will require you to have an inspection. It's mandatory, and there are costs related to that. But also, even if you are getting a conventional loan, you're not required to have an inspection, but it is absolutely recommended that you do. You should expect to pay anywhere from $300 to $600, depending on the size of your home. An appraisal is going to you'll need to have an appraisal. Your lender will require it. You should, when you work with a loan officer, and if you don't have one, you could absolutely visit us at dreamhomefinancing.com, and we'll help you out with this. But your loan officer will provide you with a loan estimate, and it's going to also include your potential closing costs and give you an idea as to what the appraisal might cost. But you should be planning for that as well. A lot of people forget about the appraisal, and it could be, who knows, $500, $700. Again, your loan officer will give you an idea, and it's really not negotiable. You can't choose your appraiser, but you can choose your inspector. Escrows is another one that people don't think about. That also will be included in the estimate provided by your loan officer, but you should be planning on, at closing, providing a full quarter's worth of your property taxes up front, so that way your lender has a little bit of a buffer, and as you make your mortgage payments, they can also continue to pay your taxes each month. Or at least, if they're not paying it each month, accumulate the money needed to make the payments when they are due. We also have prepaid homeowners insurance. You're likely going to have to pay for a full year's worth of your homeowners insurance up front. So that's a surprise to people. That one, and you should absolutely shop for your homeowners insurance. Even, I know that the insurance agent would like to have the address and all the details of the home to provide you with an accurate estimate, but maybe you can pick a home that you're interested in, and then shop some of the insurance agents in your area and get quotes, because insurance can be expensive, especially if you live in certain states where they are extremely expensive, like in the Northeast and now in Florida, some other places. But you need to anticipate that, and do not just shop for price. You should also look at what your deductible is going to be. If you want to reduce the cost of your annual homeowners insurance, you should look at increasing your deductible, but make sure your coverages are the same. You do not want to be choosing someone that's lower in an annual premium, but they're not providing the same kind of coverage as somebody else that's giving you a quote that has a little bit of a higher price. You do not want to find yourself in a situation where you need to file a claim and they're telling you, well, it wasn't included in your policy. So upfront insurance is another one that you need to be concerned about. Okay, another one, once you take possession of the property, you need to get your name on the utilities, the electric, the water, the gas, and some of these utility companies are going to require a deposit up front. So depending on what town you're looking in, I would suggest calling or even asking your real estate agent. Your agent should know. If your agent doesn't know, then that's a red flag for me. But find out what the deposits are to switch the utilities into your name. Maintenance and repairs are things that people don't think about. Just because you had an inspection, it doesn't mean that you won't have maintenance and repairs, especially if some of the issues are not solved and dealt with by the seller. So you could find yourself walking into a home, and all of a sudden the next day you've got electrical that's not working, or a toilet that's not flushing, and all those different things that maybe you do not know how to fix yourself. So you should be prepared and maybe have a little bit of a reserve for repairs and maintenance that may occur in the first couple of months. Buying lawn equipment. So maybe you're renting someplace and it's an apartment, and now you're buying a house, it's got a little land, and you didn't think about, well, crap, I need to, be able to cut the grass, I need to be able to do all these different things, the weeds are piling up, well, you didn't plan or budget, you were thinking about furniture, but guess what, you also need to have not only lawn equipment, but then also tools. Do you have a set of screwdrivers and a hammer and a cordless drill and all the other things? I'm going to link down below in the description to a video you can watch about first-time home buyer tool must-haves, and maybe that'll help you. Pest control, especially if you were shopping for your house and maybe had an inspection and you bought it over the winter, but now all of a sudden we're getting into spring and summer, and all the ants and all the other pests are coming out of the woodwork, literally, okay? And you need to be able to afford pest control. Commuting costs based on your new location. It's possible that you are buying a home that's a little farther away from civilization because it's a little less expensive, but now you've got a longer commute. Maybe you've got a gas guzzling type of a vehicle, or maybe you're in a state that's also got highway tolls. You need to factor that into what your costs are going to be. And then also your time costs in being a homeowner versus renting. So it's not just about money, but now that you're required to do all the maintenance yourself and all the yard work, what is that costing you in time? Do you have time for all of that? Are you budgeting for that time? And is dedicating that time going to take away from time that you could be working or spending it with your family or your friends? And if you want to maybe outsource that and pay for landscaping and people to come and do all those things, what will that cost you? You need to budget for that. And finally, the last one I thought of was tax and insurance increases. So you could be in the house less than a year and get a notice from the town that they've done an assessment, or they've increased their rate, and now your taxes are going up and you haven't even had one full year in the house. You will not have that with insurance, because they'll likely wait until that first year has lapsed before the renewal of the new policy year, effective date for the new year. They won't change it midstream. I'm sure some of you might chime in and say it's happened to you, but not likely. So you need to be aware of that. That's why when you think about all these things, when you're looking to qualify for a mortgage, there are guardrails in place that do not let you borrow beyond a certain debt to income ratio, because they understand that life happens and things change. And we didn't even talk about the potential to have medical emergencies or any of these other things, right? Or a car breaks down, now you've got to get a car payment. But this is why you need to make sure that you're not stretching yourself just to make the mortgage payment. You need to always leave room for all these other things that I've just discussed. As always, you can reach out to us at dreamhomefinancing.com. If you've liked this video, please give me that thumbs up. We'll help you any way we can. I hope you enjoy the rest of your day, and thanks for watching.